You ever feel like building wealth is this exclusive club with a secret handshake you just haven't learned yet?
Yeah, like there's some complex formula everyone else knows.
Exactly. And you're just trying to figure out where to even start without getting totally swamped by all the jargon.
Mm-hmm.
Well, this time we're diving deep into Nicolas Bérubé's From Zero to Millionaire.
Great book. Very
Yeah.
straightforward.
And our mission is like laser focused,
Yeah.
pull out the core, no nonsense principles, the stuff that can help anyone.
Regardless of where they're starting from.
Yes.
Yeah.
Regardless of income, anything. We're talking actionable insights, not, complicated secrets.
Showing that it's often the simplest ideas, the ones you apply consistently, that really move the needle.
That's the goal.
And what's great about Bérubé is how he cuts through all that intentional complexity you often see.
From Wall Street. Yeah.
He brings it back to basics. Building wealth isn't about chasing hot stocks or finding some loophole.
It's about simple strategies anyone can use.
Exactly. Practical steps, not just theory. Anyone can take these no matter the income.
Okay, let's jump into the first big idea then. Start small, but start now.
Sounds almost too obvious, right?
It does. But he really digs into why it's so powerful.
Mhm.
And it comes down to, well, compound interest.
The magic
He
bullet.
kicks off with a line that honestly really hits home. The best time to start investing was yesterday.
Mm.
The next best time is today.
And that nails the time sensitivity, doesn't it? Compound interest. It's like earning returns on your returns.
Snowball effect.
Precisely. The longer it rolls, the bigger and faster it gets. And starting early, the impact is huge, way bigger than people think.
How so?
Well, think about it. Someone investing, say, $100 a month from age 25 to 35.
Okay.
They'll likely end up with way more at retirement than someone investing $200 a month, but starting later, maybe 35 to 55.
Wow, really?
Yeah.
Even though the second person invests more overall.
Yes, that first decade of compounding makes a massive difference. Time is your biggest asset here, more than the initial amount sometimes.
And he really drives this home with that example of saving just $5 a day.
Right, less than a fancy coffee for many people.
But Bérubé shows how, over 30 years, if you invest that consistently,
It turns into serious money, hundreds of thousands.
it really reframes those small daily choices, doesn't it?
It absolutely does.
And he has this great insight, too. The hardest dollar you'll ever invest is the first one.
Mm-hmm.
After that, your money works harder than you do.
That's such a key psychological hurdle, getting
Oh,
that
yeah.
first investment in. It feels big,
Yeah.
but once you do, like he says, you're not the only one working anymore. Your money joins the team.
Starts generating more money on its own.
Exactly. Building that system where it grows, whether you're actively working or not.
Okay, so starting is crucial. Let time do its thing.
Yeah.
But then, there's so much noise, right? Financial news,
Amen.
endless options. How do you not get overwhelmed?
Or make big mistakes because of it.
Yeah. Which brings us to Berubé's next point. Keep it simple. Ignore the noise.
Yes. And this pushes back against that deliberately complicated image the financial industry sometimes projects.
It's like you need some complex strategy.
Right. But Bérubé argues, for most of us, simplicity wins. It's actually more effective.
So what does simple look like?
He's a big fan of broad market index funds, just baskets of stocks that track an entire market.
Like the S&P 500.
Exactly, or even total market funds. You get instant diversification, less risk from any single company flopping,
Okay, that makes sense.
and then automate it. Set up regular automatic investments. Treat it like a bill.
Though it just happens.
It just happens. And crucially, stop checking it all the time. Resist that urge.
That's the hard part in our world, isn't it? Constant updates, notifications.
Totally counterintuitive.
Yeah.
But he argues all that daily noise, the headlines, the predictions, it
Yeah.
just triggers emotional reactions.
Leading to bad decisions.
Exactly. Selling low, buying high, derailing your whole long-term plan.
And he uses a really powerful example to back this up. Warren Buffett.
Oh, yeah. The fact that Buffett, arguably the greatest investor ever,
Uh-huh.
has said his advice for his own heirs is to put 90% of their inheritance into a low-cost S&P 500 index fund.
Wow. 90%.
It's incredibly telling. This guy has access to everything, the smartest minds, the best tools, and for his family. Keep it super simple, broadly diversified.
That speaks volumes, yeah. It really undercuts the idea that you need some secret sauce.
It really does. Simplicity and discipline.
Okay, so start small, keep it simple. Now the third principle, this one might feel a bit personal for many of us. We are our own worst enemy.
Ah, the behavioral side. Yeah.
This is about emotions messing things up, right?
Absolutely. Bérubé dives into behavioral finance, how our own psychological biases trip us up.
Like what kind of biases?
Fear, greed, FOMO, the fear of missing out, these things make us abandon solid strategies.
So you panic sell when the market dips.
Exactly. Locking in losses. Or you chase some hot stock everyone's talking about.
Buying at the peak, probably.
Often, yeah. Just before it crashes. Classic mistakes driven by emotion.
And he has this insight that's just, wow. Your emotions are more dangerous to your wealth than any recession.
That really makes you pause, doesn't it?
It does.
Yeah.
Because recessions happen. They're part of the cycle. But it's how we react.
Our emotional reactions, like panic selling,
Yeah.
that's often where the real long-term damage comes from.
And to show how powerful this is, he tells the story of Sir Isaac Newton.
Yes! The brilliant physicist calculated the movement of stars.
Yeah, gravity, calculus,
Huh?
that guy.
Well, he got caught up in the South Sea bubble back in the 1700s.
No
He
way.
made a bunch of money initially, got out, but then total FOMO, saw everyone else getting rich, jumped back in at a much higher price, feeling like he was missing out.
Oh, no.
And then the bubble burst. Lost a fortune.
He supposedly said he could calculate celestial motions, but not the madness of men.
Wow. Even Isaac Newton wasn't immune.
It's a humbling reminder. Intelligence doesn't automatically protect you from emotional investing traps. That story is incredible.
Yeah.
A genius getting swept up centuries ago. It shows how timeless these emotional pitfalls are,
Absolutely.
which leads nicely into the final core principle. You don't need to be a genius. You need a plan.
Exactly. This is about bringing it back down to earth, making it feel achievable.
You don't need a finance PhD or a crystal ball.
Not at all. Bérubé hammers this home. What you do need is a clear, simple plan, one you understand,
Yeah.
and the discipline to stick with it. That's the critical part.
So what does that look like in practice?
Automate your savings and investments. Make it happen consistently without thinking.
Like we talked about, set it and forget it.
Right. Invest regularly, month after month, whether the market's up or down. Don't try to time it.
Dollar cost averaging, basically.
Exactly. And actively resist reacting to the short-term noise. Tune it out. Stick to the plan.
And he gives this amazing real-life example. Ronald Reed, the janitor.
Oh, that's such a powerful story.
Tell us about him.
This was a guy with a modest income, no fancy finance background, lived frugally, but he quietly, consistently invested his money over decades, mostly in solid dividend-paying stocks. When he passed away, people discovered he'd amassed a fortune of over $8 million.
$8 million as a janitor.
$8 million. It just perfectly illustrates the power of simplicity, consistency, and time. Not high income, not genius intellect, just discipline.
Wow. That really drives the point home. It's a marathon, not a sprint.
Exactly. Consistent, disciplined action, even seemingly small, leads to incredible results long term.
So beyond those main principles, Bérubé's book sparked a few other ideas I found really interesting, like wealth is not performance, it's patience.
What do you think he means by that?
Well, it feels like a shift away from constantly trying to beat the market, right? Chasing the highest possible returns year after year.
Yes. Instead of that high-stress chase, Bérubé suggests that often the most effective path is just letting time and compounding do their thing.
So patience literally pays off.
In many ways, yes. Resisting the urge to constantly tinker, to buy and sell based on headlines. Just staying the course with a simple, diversified strategy.
The boring approach wins sometimes.
Often, the market rewards that boring consistency more than frantic activity. It's about time in the market.
Okay. Another one I liked was, you're already rich. You just haven't automated it yet.
That's a great reframe, isn't it?
Yeah, explain that a bit.
It encourages you to see your current income not just as money for today's bills, but as potential capital, fuel for your future wealth engine.
So automate savings, automate investments.
And you start directing part of today's income towards building tomorrow's financial freedom, turning your paycheck into what he calls a freedom machine over time.
I like that freedom machine.
Yeah.
And the last one, timing, greater than not just over.
Yes. Time in the market beats timing the market.
This pushes back hard against that obsession with finding the perfect moment to buy low and sell high.
Which, let's be honest, is practically impossible to do consistently. The research is overwhelming on this.
You'll likely miss the best days waiting on the sidelines.
Far more likely, yes. You lose more by trying to be clever and timing things than just by staying invested. Bérubé's point is simple. Start now. The longer your money works, the less pressure you have to hit home runs later.
Makes sense.
Yeah.
Let's circle back to those real-world examples. The Warren Buffett house comparison was pretty stark.
Oh, definitely. Putting the opportunity cost in plain numbers. His $31,500 house back then.
Which was a nice house, sure.
Absolutely. But Bérubé calculates that if that same amount had just been put into a broad stock market index.
How much would it be?
Over the same period, we're talking over $23 million.
$23 million versus the house.
It's a dramatic illustration of investment growth versus, say, luxury consumption or just holding an asset like real estate, which also grew, but not nearly as much.
Really puts long-term investing in perspective.
It does.
And Newton's laws. We touched on it, but just reminding ourselves that even this incredible mind got swept up by market hype.
It's such a vital lesson. His scientific genius didn't shield him from greed and fear.
That FOMO got him.
It did. He couldn't resist jumping back in when things looked hot, paid too much, and then lost big when it crashed. It shows financial success requires emotional discipline, not just smarts. Sticking to a rational plan matters, especially when everyone else is losing their heads.
And finally, the book tackles market volatility, those scary ups and downs.
Yeah, which are inevitable. Bérubé stresses that downturns are normal. They happen.
They feel awful in the moment, though.
They do, but historically, broad markets always recover and hit new highs over the long term.
So for long-term investors,
These dips can actually be opportunities, a chance to buy quality investments cheaper. The absolute key is don't panic sell.
locking in those losses.
Exactly. Remember your time frame. You're in it for the long haul. Weathering the storms is part of the journey. You can't avoid them.
Okay, so wrapping this all up, the big message from zero to millionaire seems to be, well, it's not magic.
Not at all.
Yeah.
It's not some complex secret only the insiders know.
It's about simple principles applied consistently over a long time.
Discipline, patience, letting compounding work for you. Not luck, not secret strategies.
Just steady, boring accumulation.
Pretty much. And Bérubé basically gives you this clear, easy-to-follow roadmap. Understand the basics, ignore the noise, control your emotions, stick to the plan.
He cuts through the clutter.
Exactly. Empowering you, the listener, to take control by focusing on what actually works.
And I really liked his final reflection in the book, that building wealth is ultimately about reclaiming control over your life and trusting the slow magic of time and discipline.
It's a different vibe, isn't it? Much more sustainable than chasing get-rich-quick promises.
Yeah, it feels more grounded, more achievable.
It is. It's about building real security, real freedom over the long run. It takes patience, commitment, but it's absolutely doable for anyone who embraces these, frankly, quite straightforward ideas.
So here's a final thought to leave you with, kind of inspired by Bérubé. What if you stopped chasing the shiny objects?
The hot tips, the next big thing.
Yeah. What if you tuned that out and just started building wealth that actually lasts? Using these simple, time-tested principles we talked about.
Something to really consider for your own financial path.
Definitely food for thought. And maybe a reason to check out From Zero to Millionaire yourself.